Welcome, ladies and gentlemen. I got a bull market theory for you all, and that's only because of where money is currently being sat across the board. Now, you may have heard about the old money market story, which is a very important place right now because there's a lot of money sat in there. And the only reason money is sat there is because investors are literally doing the left and right. Where can I put my money? Well, if the market's not stable, if Trump pumps out some madness or something happens with tariffs or inflation or the labor market or whatever it is, ladies and gentlemen, the ultimate thing is investors are seeking a safety haven to try and make sure that they can get some yield, but they're sort of caught between the lines in the sense of, do I put money there or do I put money over here? Like, what do I do? In this live stream, I'm going to present to you my theory of a short bull run. Okay. Do I think that it's all doom and gloom? The red top would make you think so, but it's just the top that was available for me to wear today. You know, the butler was pretty like, look, Tino, this is what you got today. Sam, the butler. And he's like, this is all I could provide for you. So I'll be discussing that with Sam as to why I don't have a flurry of shirts available for the live streams. I'm joking, but anyways, am I? Who knows? But I'm going to break it all down for you, jokes aside, and help you understand that certain bits of information that the masses are going to collect are going to lead the masses to do something. That something could either be a buy or a sell. We're going to break it all down from the legacy markets. We're going to break it into cryptocurrency and just take this information and then say to yourself, all right, T, you've given me this information. I'm now going to take that and do something with it. Now, if you're looking for just buy Bitcoin, baby, go and watch the Sailor Moons. Okay. You get that? Sailor Moons, Sailor Strategy. You know what, man? I really just need. Is anybody a comedian in here that can like give me some flavor on jokes? Because mine are pretty dead. Let's get with the program, ladies and gentlemen. Welcome to Traders Reality. What the hell's going on here? Japan's making the headlines. Why would you, as a crypto investor, care about the Bank of Japan? Well, if you've been with me for a little while, you'll know about the carry trade story. And then if it all starts to come up, everyone's like, oh my God, the carry trade, what is that? Well, you probably haven't tuned into this live if you are recent, and you may not be aware of it because I haven't mentioned it lately, but we're going back into it. The Bank of Japan recently have been issuing bonds, and because of the aggressive rate that they've been issuing them, that has been forcing the Japanese yields to climb. Fundamentally, when a nation's yields climb. So, for example, when the US yields climb up, it represents that the US government is offering a higher rate of return for anyone that wants to get involved in fixed income securities, like the US bonds. So, if the 2-year yield is going up and it's increasing and it's above 4%, for example, you as an investor will say, oh, I can get a 2-year bond and earn 4%. So if I give the government $1 million, I'm generating 4% on a 2-year bond. Okay. Likewise with the 10-year, if the yields are going up, it means that investors are waiting just to see if they can earn a bit more yield before they start buying the bonds. Okay. And that's what's going on right now with the Bank of Japan. They have been issuing these bonds and investors have been a bit concerned about it because at the frequency that they're issuing these bonds, it's making them feel a little bit reluctant to get involved because it means that there's something broken or something's wrong with the way the government is handling its finances. Could you imagine someone coming to you and be like, quickly buy this, buy this, buy this. Come on, I got loads of it. I got lots to give you. Just please take some of it. And every time you go to try and buy some, you're like, whoa, why have you got a truckload of that stuff coming? Hold on a second. Wait. Hold on. You just given me 100 and I can see behind you, there's another 1,000. Well, I'm just going to wait a minute just to make sure that that's all that I can get because I'm not going to keep on buying this if I'm going to be missing out on the potential of being able to earn more because you keep on giving it. Okay. That's what the story is. And this is what has led the markets to mark up today with the 10-year yields coming down and in the bond market of the US and in the Japanese markets. To put that into perspective, we just go over to it and we can see that the 2-year yield right now is trading negative minus 0.04%. The 5-year is trading down 0.56%. 10-year is down 0.08%, and the 30-year is down nearly 1% at 0.95%. So when the yields are down, it means that the bonds are climbing up, because this article right here demonstrates that the Bank of Japan is starting to slow down on this because it's got investors scared. If you go and have a look at the 10-year yield on the yen, it's actually corrected quite badly, and it's now trading minus nearly 2%. And that is at 1.47%, which is still at a very high level for the Bank of Japan. So this is the first part of the idea of a bull market. If the Bank of Japan are doing this, it means that investors are going into the yen. What else does it mean? It means that investors are effectively going and transacting on yen. That means that we could get a nice little wave of carry trade trades. That means investors will go over to the yen, borrow that yen, and convert it over to the US dollar, which in principle would then lead the US dollar to inflate, which means that investors will be taking that money and going into the stock market and starting to buy, right? So that's where we are with the Bank of Japan. Now, furthermore, we've got this story right here where the idea that they could increase the interest rates as early as September. It goes on to talk about they are concerned about their inflation. It says here that the Bank of Japan Ueda warns that food inflation could push underlying inflation above their 2% target. But Ueda had stated previously that their current short-term interest rate was at minus 0.1%. And it's not at the target of 2% that would justify them to to increase their interest rates. It's not there yet. So if it's not there yet, that means what? Inflation really isn't the thing that they're really too concerned about. It's about how they're going to manage their short-term interest rates, which is why this story right here of them slowing down on the actual bond sales has got everybody excited, because it means that they're starting to curb the idea of them wanting to increase their interest rates in the future, because they really can't afford to increase their interest rates. Their yields right now are still too high and they can't sustain that. Now, what's been leading investors over to, or should I say, getting them into the idea of the Japanese yen and picking up the bonds? Well, Moody's has just recently announced, where is it? I've got it over here. Where did I put that? Moody's, wait a second, I've got it up here. Well, basically, Moody's has maintained its credit rating for the Japanese for the Japanese bonds market, okay, as a good reading. So that means that there is faith from investors now to start going into the Japanese bonds, which naturally means we take some yen, we can then utilize that yen by either sitting in bonds, or we then convert it over to dollars, and then the dollar would then move up, the stock market would then move up. That's point one. Here's point two. Money market funds, total financial assets, the level that it's at right now is 7,243,180 million, and it goes on. Okay. Nearly 7.2, what my title, 7.6 trillion. Okay. That's how much money is sat in the money market. What's a money market? Money market is a place where you go and say, I don't want to put my money at risk. I just want to put it in a nice little fixed income return and just see if I can just generate a little bit of a return, not too much. The markets themselves and money markets aren't as volatile. But, you know, when everything's the way it is right now, I'm just a little bit concerned. I'm just going to plant my money there. The best example was if you buy a toy and you want to look after it, keep it in its box. That's what you're going to do with this money. You're going to put it in a box, which would be an ETF. Looking at the ETFs right now across the board, we're seeing something very, very interesting. This blue line is the Bitcoin ETF. It's pretty much outperforming a lot of things. In line with it, you've got the iShares, you've got the Vanguard, then you've got the iShares Bitcoin Trust, and then you've got the iShares US thematic rotation, and then you've got the usual suspects, QQQ, and then you've got the LQB, LQD, which is a bond ETF. However, what I'm saying to you all is in the last 30 days, the largest net flows has been into Bitcoin, okay? Now, that can be a good thing, and it can also be a bad thing, because I think the benefit is, yeah, they're going into the ETF and buying ETF contracts. But in order to get those ETFs, the participants, or the APs, as they like to put it, like BlackRock, JP Morgan, all the rest of the gang, Fidelity, they have to buy the Bitcoin. It's not like a normal ETF where if you're buying NASDAQ or QQQ ETF, it's just you're buying the contract of the QQQ. You don't have to go out and buy the way you would treat it with Bitcoin, okay? The benefit is you're killing two birds with one stone. You're getting the ETF and the Bitcoin is being consumed at the same time. So if we see this continuing, then that naturally means Bitcoin's price is going to continue higher, okay? So the idea is this, okay? With the money markets having so much liquidity in them, it's getting to a point that you look at this chart and think, is it a good thing or is it a bad thing? You look at that and think lots of money is in the money market. But the problem is, if the money is there, how long is it going to stay there for? That's what we don't know. And if investors across the board are a little bit concerned about the economy and everything about it and what's going on with Trump and his policies, then this is going to keep on climbing up. But there will be an instance when they start to remove that liquidity and start going into higher risk assets. So we've got two things right now. We've got the idea that the Bank of Japan pulled a lifeline for the marketplace and gave carry trade investors the idea that they're probably not going to increase their interest rates in the near future, okay? Of course, inflation is going to be a bit of a problem for them, and they're concerned about the tariffs actually triggering that food inflation to go up, but their short-term interest rate is still negative, so it's minus 0.1%. So they're not going to be moving until it gets close to the target of 2% that they want. Now, with that being said, the second aspect to what this bull market could be is the money market with nearly $7.6 trillion stuck in money funds, okay? The second the market senses that it's okay to start taking money out of there and seeking higher risk, then that's when you're probably going to start seeing the markets continue its move to the upside. Now, let's just back that logic up elsewhere. Check this out. So, if we go over to the logic of smart money, dumb money, okay? Shows here that the smart money blue line is going down. When the smart money blue line goes down, it means that they are effectively selling assets, okay? It hasn't hit an extreme yet. So we're not at the point where smart money has actually exhausted its fact of selling assets because they've been buying it as prices have been going down and they're going to be selling it as prices going up. So when prices are going up, the blue line goes down, okay? That's one other aspect of the idea of a bull market. What else could trigger another logic for that? Tomorrow, NVIDIA. It's the earnings. Now, word on the street is that they are going to be, we could get a surprise reading from NVIDIA. It's going to be done at the close. So you can imagine that the market tomorrow is going to either be a little bit range-like, or it could be moving quite aggressively. And then the news announcements comes out, NVIDIA hits as a surprise. That would then fuel the market, and NASDAQ, in principle, should clear its all-time high, only if there is a surprise reading with NVIDIA. Now, the only reason that they're expecting a surprise is because of all of this endorsement and all these business partnerships that NVIDIA is making with all these releases of all these new products that they're producing to the Middle East and everything else surrounding AI. It's going to be another reason why investors are going to start stepping into NVIDIA, because things are looking good. Going over to NVIDIA's share price, you can see that NVIDIA's share price is doing relatively well at its highs. Looking back, it's very close to its all-time high, and it's effectively behaving the same way Bitcoin was behaving before it broke out of its all-time high at the 70,000 mark. When it hit the 70,000 and corrected, spent a bit of time, I think it was from March to November, where it consolidated, and then it just went off and cleared the all-time high. NVIDIA's sort of doing the same thing right now, where it's consolidating sideways. And if, in principle, they do well in their earnings tomorrow, that's naturally going to be fueling NVIDIA to continue to move up, which will then lead the NASDAQ to continue to climb to the upside, okay? So we've got three aspects now. You've got the Bank of Japan story, where they are now going easy on the issuance of bonds, which gives investors confidence. And then they're like, okay, let's lock in these high yields right now. That would lead the yield prices to go down, the yen bond market going up. People are transacting on yen. The logic of them increasing the interest rates in the near future is now starting to get a bit slim. So then investors will take that carry trade, borrow yen, convert it to dollars, dollar goes up, stock market goes up, euro comes down, okay? Second aspect is the money market. Got $7.6 trillion worth of liquidity stuck in there, and investors are looking left and right where to put their money. They just need a little bit of stability. And it's usually the case when the market starts to pump up, and that's when investors start to get a little bit excited and they feel like they're missing out, which leads me over to the final point about this. In front of you is the Investors Business Daily chart, okay? This is going to tell me whether or not we have got the idea of accumulation or distribution. The NASDAQ right now has got 2 days on the distribution of the NASDAQ and 2 days of distribution on the S&P, okay? Now, that's okay because you do get days where they sell off. And if you look on the bottom right, you can see we've got relatively decent volume coming into play on the sell side for the NASDAQ. But structurally, it's just pulling back. We do have a gap here, which is a bit of a problem, which if the idea of NVIDIA not doing well, NASDAQ could actually roll into that gap. So there is a possibility, okay? Now, what I'm trying to convey to you all is this. If the markets are positioning themselves for the future, then it looks like they could send everything up with the expectation that everything's going to come down. You've got tariffs, you've got Trump and his inconsistency of what he's saying, pulls deals left, right, and center, makes wild announcements. It's unstable. 7.6 trillion in the money markets. Investors don't trust the marketplace. Okay. You got the story about the Federal Reserve and the interest rate cuts. 97.7% are expecting the interest rates to stay the same at 4.25, 4.5%, right? Going into the next month after that, it's relatively the same. Well, it's about 78% now. So investors are still on the idea that the cost of doing business in the dollar is still going to be high. It's a matter of time before it does actually start to show, and the Fed will then need to act quickly, because I think the market is pricing in the idea that the Fed's going to cut bloody quick. And when I say quick, it's going to cut big, because they just want a little bit more information about the economy. I mean, if we just go into today's data that got released, look at this. Today, we had the core durable goods orders coming in positive 0.2%. And then you get the core durable goods orders coming in at minus 6.3%, which was higher than what they had expected. Okay. So seems like things are okay for the US economy to a degree. Let's go and have a look at the euro a second. The euro has made a move up, made a move down. Euro's forming a bit of a structure, going over to the dollar dominance. Dollar is starting to climb. We've got a nice little W formation on the dollar. But because of what's going on with the Bank of Japan, it's encouraged investors to start stepping into dollars. And today's the first day that everybody comes back in response to the European pause on the tariffs. So you've got NVIDIA and all the rest of the gang gapping up at the open. NVIDIA's about to come back into this vector candle. What you don't want to see is you don't want to see assets appreciating across the board before NVIDIA, because then they release and they miss and then it comes down. Boy, you got yourself a bit of a problem. There are gaps. Can't deny that there are gaps here. And it's the same with the NASDAQ. So this is the logic that I'm putting together, ladies and gentlemen. If the idea overall that this story with Bank of Japan, this story about the money markets, okay, this story about pausing on the tariffs, the story about all the good things that are happening right now about the marketplace from a technical point of view, that in principle should continue to lead assets to appreciate across the board. But it's going to stop where they do need to correct it back, because when it does start to turn, that means the market's priced in the good news. We've still got to hear what Trump has to say about the Eurozone tariff. It's going to be good. It's going to be bad. We don't know. Lots of deals are coming through right now, as what Trump says. But the market's not stable to just go with the flow. Anytime news comes out, the market will pump and then it will give it back. You only have to look at price action across the board and you can see that it's going up and down, up and down. I mean, look, Bitcoin's pumping up right now and that is bloody wonderful. Happy days. And the market is not even open just yet. Is there any reason for that? This NASDAQ's just moving up anyways. Hold on. Here we go. Trump's just said something. Okay, continues to illegally allow men to play women's sports. Okay, so he's just talking about California. Okay, yeah, it's nothing that's going to be moving the markets per se. But this right here is the market reacting to this story right now about US assets getting the boost from the Japanese bond thing. That's what's going on right now, which could lead you to a short-term bull market. All right. Bitcoin in itself, ETFs going up, but I'll give you another one. One that we have been speaking about before. And I said this before, that the second it gets into its IPO, this is going to wipe Coinbase off the floor. Circle IPO, $640 billion IPO. That is wild. I'm telling you now, Circle is the company that will be competing massively against Coinbase, because it's only really Coinbase that is the cryptocurrency company on the stock market. But Circle, with regards to its stablecoin story that it wants to start going forward with, this is going to be, in my opinion, a very good stock when it comes to the stablecoin game and what they're trying to do with it. It's going to be brilliant. I think this is going to be a massive, massive stock in terms of market cap. It's going to be the only real challenger of the market in terms of Coinbase as a stock. Investors will be able to take advantage of both, because you've got two different aspects to the company itself. Coinbase provides institutional investors and retail investors the ability to trade. You know, it's all about the transactional revenue that they earn from people that trade and any other services, storage and what have you. Circle is all about stable coin issuance. So it's going to be a different sector in the cryptocurrency market, but a very important one in terms of stable coins. Okay. Absolutely brilliant that is. So I'd keep an eye out on Circle on the IPO trade day. Of course, on the day of the IPO, it will go up and then it will slump. That's what happens on IPOs. But $640 billion, you can't complain about that, ladies and gentlemen. Now, Trump today isn't really talking. He's having the day off. But that doesn't mean that he isn't going to get to his Truth Social posts. He's just put out, you know, something about California leadership and about women playing in sports and men playing as women in sport. Anyways, but nothing market related. Okay. Quickly going into price action across the board. Let's go to Bitcoin and have a look at what the story is. So Bitcoin's making a nice little move to the upside right now. And we've got a red vector candle zone, which is posing as a point of interest. Now, let's just quickly go into the Viva la order flow. Problem that we've got here, guys, is there's not that much liquidity being taken. Looks like it's a nice little stop run. It's just going to sweep the liquidity because we're not seeing this. Yeah, we're not seeing big orders. See, it's come back to that same point that they sold $25 million worth of Bitcoin. It's not that much. Looking at it from the perspective of liquidations, it hasn't quite taken it yet. Let's just refresh this chart right now and have a look. Oh, for God's sake, Tina, what have you done? Here we go. Right, so you can see it's just made a run for the liquidity. It's taken out quite a few short liquidations per se. It's just taxed some of that, but it hasn't really hit the main margins, which are all the way up here, which sits around 112,500. Okay, some commitments come in. Some heavy margin traders are coming in here with the pinks, so they starting to show a little bit of interest in going long right now. Quickly going over into the area of liquidity is, yeah, so they're close towards this. I think they would have hit 110,650. I mean, it's not yet taken it. You always taken that liquidation point. It has done it. Okay, so that's good news right there. And just on the back of that, you can see that if NASDAQ sustains this move higher, then that's naturally going to lead Bitcoin to continue up. But the market, in principle, hasn't reacted to the tariffs. Remember, the stock market has been closed since Friday night. Since that, you had Trump and the tariffs, put out 50%, not going to budge. Then a couple of days later, he comes out and says, yep, that's it. We're going to start talking with the Eurozone. Let's put an extension. Since then, you've had this development with the Japanese. Okay, so things have changed over there. And now we're going into the open where all those investors are now going to price all of that in, which is naturally leading NVIDIA and everything to gap up. So it could be a decent day today. And looking at things, you can see that gold itself right now is starting to pull back ever so slightly. And it tells me that investors are effectively taking profits on gold. So that's something to take into consideration. Going into the euro, same story. Gold or euro is pulling back ever so slightly. And the fact that Japan have done this story with their interest rates and everything, dollar yen is climbing up. So when dollar yen starts to move up, that's when things start to get interesting. But to solidify the idea of the stock market going up, Aussie yen is climbing up too. And Aussie yen, last time we wanted to see that happen, but then of course Trump pulls out this story and that led Aussie to go down. But now we've got this base where prices come back into this range. The idea is that if Aussie yen keeps on going up, Aussie traders are starting to transact on a carry trade, which naturally means that the stock market will be climbing up. I do think that if Aussie yen clears 93.84, we're probably going to have a really big rally to the upside, okay? But I need to see the markets correct first and fill these gaps, which we've got right here on the NASDAQ. This gap down here. That would then only solidify the idea of a nice bull run, because this gap here is no good for me. I don't like that gap. They've tried to fill that gap, but it hasn't been filled just yet. And we can't say that the market can't drop that much, because any news announcement can come out that will rock the markets and put them into an unstable position. Okay? So just take that into consideration. Any questions, ladies and gentlemen? Here we go. Can you do a heat analysis? Okay. Let me just do... Okay, I'll do this for Ethereum. Wait there. I'll do this for Ethereum. There we go. Right. So this is Ethereum right now. And now a lot of you are doing the old, it's Bitcoin altcoin season and all that stuff. So let's just confirm that for a split second on where we are with altcoin season. So it says right now we are in essence altcoin season mode. It's there, okay, as such, right? And well, not so much, but it's starting to get in that direction. But the dominance of Bitcoin is still there. And I've got an expectation that Bitcoin dominance is going to shoot up back to its highs of 65 and more. I really do think Bitcoin can get to 71. I really do think that's going to be the case, because you'll get a little rally in the Ethereum markets, and then Ethereum will just, Ethereum hasn't even taken its all-time high. Like, what the hell? It's just still there. It's doing nothing, you know? But when we look at it from the perspective of order flow, you can see that they've been building up a lot of positions in Ethereum. Nice little W structure, but just look at it. Collective of bids, reaction. The way to use this platform is to wait for the orders to come in. And when you start seeing the orders not really breaking down, it looks like the bids are done with their business. Take every low point that you see in the chart. It always comes with a massive bid order, okay? And that's a lot for Ethereum right there. When you see them on Bitcoin, it's like 50, 60, or even 35, 40 million. Go back, you will see that for every reversal that happens in crypto or Bitcoin or Ethereum, it always starts off with the collection of big bids inside an area. Don't look for the pinpoint price. Look for the collective. Look at this area here. You've got big bets right there. Look, it was 500,000 that was transacted initially, but then they traded nearly 10 million. So that's a lot of Ethereum right there. Come back to it again. And they transacted 4 million when the initial amount was 1.5. They move up, take some profits. They come back into it again. They load up again. And then it rallies because they placed all these orders to sell. Now, coupled with the idea of the macros and the positive data and all that fun and games, now once you've seen price clear out quite a bit of liquidity like so, there's going to be the next event where they come back down again to get these bids collected. And that's when you pay attention to the chart. You only pay attention to price going up if you've already been buying at the lows. And then you're working out how long is it going to be till I decide to sell again. That means sell at higher prices, right? When you then see price correcting back down, that's when you really pay attention, because then you're waiting to see how many guys are stepping in and buying up. Looks like that buying starting to slow down. Maybe the bids are in. Let's see if price can actually start recovering up. Then you start noticing price pushing up very aggressively. And you're like, right, I need to get in on that. It breaks out this previous high and you're like, okay, look at the offers. They're coming in. Okay, I better jump in and try and grab myself a quick flip on a move to the upside. That, in my opinion, is how you can simplify the trading. It really is. And then you just look at Ethereum and you can simplify it even more. If you don't want a platform like this and you go onto a platform like TradingView and download this indicator if you are new, you're trading back to the vector candles. And there's your red vector candle recovery to the T. It's done it. Just a case of just waiting for it to come into action. Look, stopping volume candle, holding price to then come back and recover it. Awesome. Simplifying your trading. But you've got to practice exposing yourself to these instances, because anybody that is new and you haven't downloaded this indicator, just go to the homepage of the Traders Reality website and just walk through it. It shows you everything you need, how to download it, how to put it to TradingView, quick video, and there's a PDF right there. Okay. Download it. It shows you how I trade that system with the trading examples in there to help you understand it. And you know what's crazy? When you look at this, you're going to come back to this chart and you're going to say, it's exactly the same shit. It really is. It's always back to vectors. Those are my target profit points. I build a position, and then if it goes, it goes. If it doesn't, I'm wrong. Next trade, because there's going to be another vector that I can trade towards. But I promise you, in that PDF, there is trades that I show you, and then you'll see it's exactly the same thing. So you then have to go back. I mean, are you seeing the same thing? Why does it keep coming back to these vector candles? It seems to do it all the time. And it's not just so simple that it always comes back to it. You've got to marry up the logic. Where are we in a macro perspective? Where are we in the bids, the offers? Are people really buying right now? What's going on? Because you can't say, oh, there's a vector candle over here, Tino, and it hasn't recovered it. Oh, this system is dog. I mean, look, there's a violet vector candle all the way over here, okay, that hasn't been fully recovered. Now, when we mark price across that point, and this is the vector candle zone that has been left behind, that hasn't been recovered, we then take the chart and look how long it took them to come back towards that. But they came back to it. But when you're looking at a vector candle all the way down here, you're like, but Tino, it hasn't come back down to this green vector candle. Let's get real, bruv. Yeah, it'll come back to that at some point. Something could happen which could send it back down to that point. When it gets close to it, you pay attention to it. If it's not close to it, why would you give a damn about it? Trade to the next vector. And that's the hybrid system for you, ladies and gentlemen. Any other questions? How many of you like the stream? 300 of you. What is it that I always notice? The likes, it's always at 300. 330. Why? That's something. 90% of the time, it works every time. Market maker pushing price to delta neutral. Yeah, it's probably transacting in those areas, most definitely. I bet there's gamma exposure on Bitcoin. Gamma exposure up here, okay? And there's probably gamma down here, most likely down here. And ultimately, it's a case of if they come back to those zones, to come back up into those zones. But again, you've got NVIDIA news announcements coming out soon. So just be very, very cautious with that, ladies and gentlemen. Because the same people like it every day. Mad love to the same people, man. Man asks a stripper if she took Bitcoin and she replies no, because Bitcoin goes up and down more. Just for the nature of the joke, I'm going to read it because I stumbled on that, but man asks a stripper if she took Bitcoin and she replies no, because Bitcoin goes up and down more than she does. So bad. It's a good one. It's a good one. I like that one. Composure. Anything else? Tina, with the Bank of Japan owning a half of the government bonds and Japan holding 7.8 trillion in debt, is this level of central bank ownership sustainable, or does it risk a crisis? Great question. When you are the holder, like you hold $7.8 trillion worth of debt, the more debt you hold, the more that investors are going to demand to buy your bond. So that naturally forces the yields to go higher. This move right now from the Bank of Japan is a big move, and the markets welcome it, which is why the yield on the 10-year Japanese yen is going down. Okay, so it's what they're doing is they're probing, they're testing. Do you like the idea of the fact that we hold a lot of debt? Okay, and the more issuance of bonds we give, the more that debt keeps on piling, the more the investor is naturally going to be seeking a higher rate of return. But you can see that there's a little bit of a problem right now because the 2% inflation target could be compromised and food inflation could actually compromise that. It's going to then naturally force the Fed to the interest rates for the Bank of Japan to end up being pushed up. But at the same token, their short-term interest rate goal is less than what they want right now. Okay, they want it to be 2%. It's now negative at minus 0.1%. So you've got investors trying to test out the idea of where should we put the money? Should we accept it for what it's worth and just take advantage of it now? Well, the fundamental reason that they are in that accumulation of debt in the first place is because of the issuance of bonds. Okay, so if they say we're going to stop doing that, investors welcome that, your yield's going down. Okay, so when we get into the story of maybe when the Japanese yen needs to increase its interest rate, okay, well, it's going to be factors based on inflation, tariffs, okay? And it's really those two factors that are going to deal with the idea of whether or not they do increase their interest rate even further. If they don't have that inflation problem, then they can continue with the way they are. They're not going to increase their interest rates. Investors will then start taking the yen and using it and borrow it to go over to the US dollar, convert it, and chain exchange. By them borrowing the yen, they're reducing the yields. Okay? So, because they're transacting on yen. So they'll go either into the bonds, they'll either go into exchanging it, they'll do something with it. But then that helps the Japanese government to control their bond issuance story. Yeah, Tino, have you heard the guy, a hyperliquid guy who made 80 million and lost, and now revenge trading, his liquidation is 108? Well, Tino, could you scroll through the charts and educate us on how to use the hybrid system? Pierre Charles, mad love to you. Okay, how to use the hybrid system. Well, the be all and end all is the first place you want to go is here because I show you how to do it on here. Okay, it's a PDF. Just read it. It shows you the simplistic way to understand this system. Simple way. You can expand on that by doing the course. The course is going to give you the foundation. The course is free. There are other courses, okay? To free up time, take them, right? If not, get this course done. This free course, it gives you everything you need to understand about the hybrid system from a technical point of view. What's a vector candle? What's the market maker? What moving averages, vector candles, psychological levels? It's there. It's an hour and 10 minutes. That PDF will take you more time to make a cup of tea than it does to read it. But I promise you, there is a challenge in that PDF. A challenge that says to do this exercise of marking off 10,000 W's, 10,000 M's. And I say in them about 17,500 markings. I was obsessed with it because it started to solidify that this pattern keeps repeating itself. Then what I ended up doing was coming up with a variation of how the W formation appears. Okay. Now here is the clue that you can understand it differently. Let me just explain to you this, right? I'm getting rid of all my indicators. Don't need them, okay? But let me explain to you something. This is where it hit home, okay? You can go back in the charts, right? All of you right now, you can go back and you can do that exercise, which is a W formation, right? Go and have a look at a W formation. That's one right there. What happens? Price comes up a little bit. Awesome. You then go and try and find another W formation. Here we go. We've got another one right here. You've got a mini one. And then you've got another one, and then it leads to a nice rise, retrace, continuation. You've got the pattern there, but you've got yourself principally a W formation, okay? We go back in the charts again. What do we have? Not so much a W there, but you could say that this, that's on the hourly, so there would be a smaller W formation on there, but we can make the assumption that there's a little W right there. Price goes up. We go for another one. Let's try and find another one. Here we go. This is a nice clean one We then go into it and you can see there's a nice little W formation, okay? So when you look at that from a normal trading perspective, you've got red and green candlesticks. That's all you know. And all you have as a retail trader is, I only know these candlesticks, right? Now, look at it from this perspective, okay? Just get rid of the sessions. The W formation looks different now. It's the same W. But you've got a red vector candle right here and a blue vector candle. This is a strategy in the hybrid system which says red candle, blue candle formation, which usually leads to moves to the upside. I know. I've seen it. It's hindsight. I know it's gone up. You know, that's bullshit. I get that. But I challenge every single one of you to go back and run this exercise. And then take a screenshot of every single W that you have seen that has performed well, right? You'll see what the makeup is of the W. You see there's a red vector candle. You then see a green vector candle breaking that point. This is on the 1 hour time frame. The 15-minute time frame is a treat. Look at this. There's a W formation here, right? Look at the makeup. It starts off with a red vector candle to the top side of the range. It comes down. Stopping volume candle 1, stopping volume candle 2. Something's going to change. Blue vector candle comes in and bursts through. Retrace, green vector comes down, the red vector, stopping, it's a trapping candle, climatic candle to make everyone think the move is going to continue to the downside. Then it starts to come back up. This is on the hourly. I bet you there is a green vector candle breaking the 50 EMA on the smaller time frame, and it's this candlestick right here. Wait there. Let me just look at it. This is going to be another vector candle. Let's go on the smaller time frames, and I bet it's breaking a moving average in that zone. Here we go. Where are we? Where is it? Let's go back. Let's go back. I want that arrow. Where is it? Come on. Where are you? 15-minute time frame. Yep, we're getting close. Here we go. Come on. Nope, not on the 15-minute time frame, but bets on the 5. The 5-minute should be there. I'm going to prove my point. And if I don't, I'm going to end the live. Fuck's sake, Tino, man. What Anyways, there was a vector candle there. It's always going to be the case. Look, they're breaking. All right, it's a few minutes beforehand. But you get the idea, ladies and gentlemen. Okay? And what I'm trying to say to you is, when you go back in the charts and mark off all these W's and all these M's, you'll then start to understand that the W formation always ends up playing out when you can develop or train your mind to understand the candlesticks that form that structure. Because if you can go back and find it, it means they're going to do it again in the future. You can't tell me they will never create this structure ever again. And then if you can say, Tina, they will never make another W or another M formation, then we then genuinely have the most uncertain market ever. That means the buying and selling behavior is forever evolving and changing. But it's clear as day that it doesn't change because they keep repeating the same thing over and over again. When you train your mind to understand the variation of how this pattern can form, you then go into the future and be like, I've seen that before. I've seen it drop down with various red vector candles and they haven't been recovered. I've seen it where there's been green vector candle breaking from this point, which then leads to the midpoint of the W breaking and trading back into the red vector candle. I didn't care about it going all the way up there. I care about the fact that I recovered the red vector candle. Go and have a look at Ethereum. The same logic is there. Look, what do you see? What do you see? You see, in principle, the much bigger W formation, but the principle's there. You then look at that and say to yourself, hold on a second, it is a bit of a wide W formation, but fundamentally, it's created the move to the downside, left the vector candle up there. They came up to the midpoint of that zone, which was in principle this area here. They broke away from it and come back into the vector candle recovery. Now go back in the charts and find the same thing. There's another one right there. W formation, sharper W formation, but what did it all start off with? A blue vector. Then it came up and then continued to fully recover the whole range. Go back and tell me that after you've done this and done it 1,000 times, even more, and I promise you, you'll come back and you'll look at the charts differently because you'll then be able to put yourself in a position where you can say, right, I know what I'm looking for now. You're adding structure, you're creating the edge, right? I hope that makes sense to you all, ladies and gentlemen. Mad love and respect. Still, Tino still doesn't know about the Trump Bitcoin news. I don't know what's going on. I don't know. What I do know is this. This has come into play. I don't know about the Trump Bitcoin news. I was extremely satisfied 50% tariff allotment on the European Union, especially since they were slow walking, to put it mildly. Our negotiations with them. Remember, I am empowered to set a deal for trade into the United States. If we're unable to make a deal or treated unfairly, I have just been informed that the EU has called to quickly establish meeting dates. This is a positive event, and I hope they will finally, like my same demand to China, open up the European nations for trade with the United States of America. They both will be very happy and successful if they do. Okay. I don't know what's going on in terms of Trump. I don't know what the story is. I haven't read the chat. I haven't read the chat just yet. Has anyone mentioned it about it? Hold on a second. Where is it? Someone give it to me. I don't know, you know. Trump Group will buy 2.5 billion worth of Bitcoin. Is it? Hold on a second. Hold on a second. Is that true? Because yesterday I did a live stream saying that Trump media called the Financial Times dumb writers for saying that they weren't going to commit $3.5 billion worth to a Bitcoin fund. So if it's now come out, then yeah. When did he announce it? Because it was flawed yesterday. They said it wasn't the case. Wait. That's not come out. No, they spoke about it yesterday. No. Now it's come out. Hold on. Is it solid though? Because yesterday they came back and said that they didn't do it. Here we go. Trump Media and Technology Group has entered into agreements with institutional investors to raise $2.5 billion for the creation of a Bitcoin treasury, US President Donald Trump's social media firm said on Tuesday. But they said yesterday that the FT are dumb writers because that's not what they agreed. What the hell? That doesn't make sense. Go and watch yesterday's live stream. You know what? Just to make a point. They announced it just, it's going ahead then. So it is going ahead. Okay then. Happy days. That was just a mad confliction then. That did not make sense. That's just come into my newsfeed. I've just seen it come in. So that probably explains that little pump. They announced it just after you started the stream. No problem. No problem. All right then. Do you prefer using the 1 hour time frame when you're using the hybrid system? All time frames realistically. It all depends on how close the vector candle is. Okay. Okay then. So yeah, well, ladies and gentlemen, if they're going to be raising $2.5 billion to get some Bitcoin, then that's all good. That's just one entity. It's 2.5 billion that's going to come into Bitcoin. Over what period? They're going to try and raise it. I want the money there. I want to hear I want to buy Bitcoin. That's what I want to hear. This is speculation. All right. Too many times we've heard about Utah, Arizona, all the other people that want to turn this Bitcoin into a treasury asset. Then buy the flipping Bitcoin so you can put it in there. Don't tell us you're going to do it. Just do it, and then we can enjoy the benefit. Otherwise, it's a sell the news event kind of story. Capiche? Anyways, other than that, ladies and gentlemen, yeah, mad love and respect. I'm going to go hit the like button, subscribe on the way out, and there's your bull market theory. All right, sell XRP. Mad love. Peace.